Hey everybody, and welcome to The Breakthrough Effect. I'm your host, Jerrid Sebesta. I've had two successful careers. First, I was an award-winning TV meteorologist, and then a financial marketing strategist. I was living the dream, making good money, but inside I was craving for something more, something bigger. So I stopped deferring life and I started creating exactly the life I was searching for. I doubled down on unlearning old mindsets and creating big breakthroughs for me and my family. And now I'm bringing that same transformation to you. Let's understand the rules of this game. Let's get clarity. Let's stop chasing and start becoming. This is The Breakthrough Effect. All right, today on The Breakthrough Effect, I am talking with the value girl herself, Quinn Driscoll, a CPA and business valuations expert who spent a decade in high-stakes world of litigation consulting, helping hundreds of business owners understand what their companies are actually worth. Quinn realized that most entrepreneurs are building businesses that are actually worth nothing, not because they're not talented, but because they are operating without a financial strategy. Get ready for a breakthrough conversation about building a business that's not just profitable, but also valuable. Please welcome to the show, Quinn Driscoll. Quinn, thanks for joining me today.
Hi, thanks, Jerrid. Thanks for having me.
Exciting conversation. I love talking about business, love talking about money. So let's jump in. Are you ready?
I'm ready. Let's do it.
So I follow a lot of people in this arena, one of which happens to be Mark Cuban. And he says something to the effect of sales cures all. Maybe you've heard him say this. Do you believe that? And if you don't believe that, how can you pick apart that argument a little bit?
Yeah, so I think sales is half the equation. It's probably the first half of the equation because you can't really get anywhere unless you have money coming in. But just as important is where your money is going, how fast it's flying out the door. So I would say most businesses find that they get to a point where just selling more is not a sustainable plan. So at some point, you're going to have both sides of the equation.
So what is, like you said, like they don't have the strategy, they don't have the plan. Okay, so what are some essential pieces of quote unquote the plan?
Yes. So for me and for my clients that I work with, number one is percentages. So a lot of times, people who I work with are in businesses where revenue or sales might be a real roller coaster. So a lot of commission-based businesses, like realtors, things like that, where, you're paid on commission. So you can have really vastly different up and down months. You might have seasonality. We're here in Minnesota where there's a couple months in winter where the real estate market really slows down because of the weather. You have competition. You have all of those types of things that make it hard to predict your sales. And so what you can predict is not necessarily the dollar amounts that you're going to have to spend, but the percentages of spending and how you kind of break down where the money is going after it comes in the door. So to me, when you use a percentage-based expense system, you are going to be way more flexible and able to handle the ups and downs of sales.
So again, you go on percentages. So again, I know that you're a big proponent of running a business like a business, where a lot of, especially I would say solopreneurs, perhaps. I love your input on this. Solopreneurs probably do it. I don't know, maybe the worst. Is that true? Before we kind of go into some of these percentages, do you see there are certain business archetypes that maybe don't do it quote unquote like they should?
I think that's true. I think that solopreneurs, because there isn't anybody else kind of relying on what they do, that it doesn't feel like a big deal, especially at the beginning, to be just sort of winging it. And so, it's well, it's just me, whatever, it's not a big deal. But eventually, if you want to have something that's really sustainable, transferable, and valuable, you got to get into the systems and the kind of frameworks and strategies to actually be making decisions about what you're doing financially.
Right. So like, again, like winging it is like, I'm just pretty much tracking money coming in and money going out. That's really about it. And just kind of figure it out as you go on. No idea about taxes, profitability. Who knows? Am I really a profitable company? Who knows? Is that what you mean by that?
Yeah, and not even, some people honestly don't even do a lot of tracking or not ongoing tracking. So, maybe it's like, well, I just look at my bank account. If there's money in there, I figure things are going okay, and we'll deal with it at the end of the year when I have to file my taxes. Like that is a super common thing I see, especially with new business owners, because there's so much that you're trying to juggle and handle. But it's like, well, if there's money in the bank and I can pay myself, then things must be going okay. And it's just not at the top of the priority list.
You say that sales minus expenses. I think most people would define my profitability as like whatever I sell minus my expenses is my profitability. But you think you believe it's not necessarily more complex than that, but you're missing a few pieces. Get into some of these key pieces.
Yeah, so I think it's important to understand, number one, what are expenses that are variable and what expenses are fixed, right? So there are certain types of things that, maybe expenses you only have if you have a certain type of sale. So, for me, for example, if I have a meeting with a client and I have to rent an office space. Like usually I'm just sitting here in my home office. But if I have one of those types of meetings, I will have an expense to rent an office space, right? So that's something that's variable based on what I'm selling. But then there's also the expenses that you have no matter what. So those are things that you always have to factor in. Subscriptions, marketing, tools, and things like that, where you're just going to have them behind the scenes regardless of what's going on. So those are, kind of two broad categories to think about. And then what you are paying yourself. So that's a biggie for all small businesses. What is the owner getting paid? Because a lot of times people are... they kind of just create another stressful job for themselves rather than creating a business that pays them and has some return and profit.
Okay, so let's talk about that for a second, because I could see how a lot of, again, especially new business owners, solopreneurs, they've got a checking account, they've got sales coming in, they've got expenses going out. Who knows to what degree by which they are actually tracking this and, making any sorts of, knowing kind of what's coming ahead. And then at the end of the month, it's like, oh, I got X amount of dollars left. That's my income transferred into my checking account, or maybe I'm using the same checking account. Who knows really for sure? But you're saying that like, there's got to be a better system at play. So like, are there certain percentages you go by? Like, again, to me, at 25% seems like I've got to like set that aside for taxes. That's like kind of just like known information, right? But like, what is viable for your own income, so to speak? And how should people operate? I mean, should they literally cut themselves a check every 2 weeks? How do you suggest people do that?
Yeah. So, I mean, I think there are best practices, and then there are like actual what people are going to do kinds of practices. And it definitely depends on the person and how much detail, how much you're willing to get into really slicing and dicing. So at a minimum, I would say you want to look at setting a percentage to pay yourself. In kind of early stage businesses, if we're talking about like professional services or something like that, where there's not a ton of expenses, I would say 50% as a baseline for paying yourself. So I didn't make this stuff up. There is a really excellent book that's called Profit First. It's a whole method around doing this type of percentage-based tracking and decision making for a small business. So if you have not heard of it or have not read it, and you are a like a lover of reading business books and kind of self-implementing, that is a great one that I recommend. And they have guidelines in there for this type of business and this size of business. Here are the percentage breakdowns. So I recommend, looking at those details, but just kind of rule of thumb, I would go 50% for paying yourself, 30% expenses, and then 20% taxes saving.
Okay, so again, my feeble mind on business, and I know the answer to this question, but I want to hear how you answer it. In my mind, if I'm paying myself 50% of whatever sales I'm creating, that means I'm 50% profitable. But that's not how you define profitability or value, is it?
No.
Okay, so explain. I kind of have an idea how to explain it, but how would you explain that to somebody who is kind of new to this?
Yes. So I would think about, and this goes back to thinking about business value in these types of concepts, right? So if you had to pay someone else to do the work that you were doing, what would that cost? And that at a minimum needs to be considered in your profitability. So whether you decide that that's the amount you're going to pay yourself or not, there needs to be some recognition of the person who is doing, delivering the services or doing the work has to be paid as part of the business, or
Sure.
else it's not a viable business. So thinking about, from an outsider's perspective, what would you expect to pay somebody for the work you do? And then what are the expenses that are required to run your business? So, a lot of times people get into where your business feels like a really good tool for tax planning, right? So there's kind of one side of the spectrum that's like, I'm going to run absolutely everything through my business for tax purposes. And if, somebody can come and get me if they want me to, do something different tax-wise. But for true profitability, I look at what is necessary and ordinary for the business. So if you're coming up with all kinds of crazy schemes for personal expenses and stuff like that, that's your own choice. But looking at what's really necessary is, to me, what needs to be there for really
Sure.
understanding your profitability.
So if your business is just basically covering your own, and I'm speaking to solopreneurs here, but if it's just paying for you to run your household, in theory, according to your definition, you have zero profitability. Am I hearing you right?
Yes.
Well, that's really so that can be really disheartening to people, because then what you are saying is that you've literally just created a job that's just bad enough, or just big enough to pay for your expenses, and just bad enough that it all relies on your shoulders. Am I like, I'm not trying to be facetious, but like that's kind of what you're saying.
Yeah. Yep. I mean, that's the essence. Yep.
So, and what's interesting is I'm not laughing because it's funny. I'm laughing because I've going through this myself, and also too, you realize like how hard business is, like how to be a profitable, valuable business is really, really hard. So how do people like really make that shift? Because maybe they've been running their business, maybe they're a solopreneur, maybe they've got a couple employees, but really it's just kind of sustaining their lifestyle. How do you make the switch from going to just basically being zero profitable? You've just created a job that just pays for your life, which isn't bad, but we're trying to build something. The stress isn't worth it, by the way. Like there needs to be, it's not, it's too difficult and it's too scary, right? So it needs to go above and beyond that. So like, what can people start to do to make that shift, to make it's just paying for my lifestyle to having a valuable company?
Yes. Such a great question. I might go off on a few tangents here, so just bring me back if I get out of hand. The things to think about when you're thinking about a valuable business is the business as an entity. So an entity that is separate from the owner. Okay. So number one, you want to think about, how do I create something that is separable from me? Right. So that looks like, is that like a product would be, the easiest example, right? Like we're both kind of in this online coaching business speaking world where, maybe you have an online course that you have demonstrable history of sales. You have a demonstrable history of how you advertise to bring people in so that somebody looking at it from the outside would say, oh, this is something that if I bought this from Jerrid, all I have to do is do what he's been doing and I will be making the money, right? Because whoever is buying it for an investment purpose is just considering, am I going to make money from this or not? And how much and for how long, right? So when we talk about business value, it's cash flow, risk, and growth. How much money am I getting? How risky is it? And how stable is it? How fast is it going to grow? And things like that. So number one thing I think about is something that is separate from yourself. And so when we think about, if a product is not part of what you're doing, right? If you have a service-based business, think about like, I'm a CPA, so I think about like an accounting firm. Accounting firms are being bought and sold and transferred all the time. And why? Like what has value there? The client list, the client relationships, if you have staff in place that's stable, if you have, the reputation of a name of a firm that's not attached to one person who's going to be leaving, like all of those types of things that are more intangible. But it's showing that there are basically like processes, procedures, intangible assets that are in place that are transferable to someone that would make them money.
Yeah, it makes sense. Can all businesses achieve that, or are there just some businesses or niches or categories where it's like it's really hard to do that, and you really just have to buckle down and focus on profitability? I mean, you creating it for you essentially.
Yeah, so that's a great question. So I think one thing to think about there is if it's just you and you're a solo service provider, you can make a really great income. So goal number one is if you just want it to be you and you don't want to be trying to be coming up with, products or other having employees or things like that, the best things that you can do are make as much money as you can while you're working, and you have a lot of control over that when you're a business owner, which is amazing. And be smart with the way that you are kind of minimizing your personal risk and setting yourself up for the future. So a lot of times that would look like, retirement savings, making sure you have enough cash in the bank, all those types of things where, if you think about it in terms of really being able to kind of craft your lifestyle the way you want it, what are the things that you would do if you were having a high-paying job to set yourself up for the future? You would be saving for retirement. You would be maximizing tax strategies and all that kind of stuff.
It really makes sense. And I appreciate that, and I connect with that as well, because I think of, again, when you're a business owner, you've kind of got this little machine over here, but you still have like your personal finances as well. It runs the same way as if you were working a W-2 job. You would still want to make sure that W-2 job is serving my personal finances. And same way, just because I'm a business owner doesn't mean that I'm going to run my personal finances anyway. I'm still going to be saving and making sure I'm building wealth in whatever route you choose. I would have to assume that you are then pretty conservative when it comes to running your personal finances. Like consumer debt is bad. I don't want to put words in your mouth. I'm assuming you would agree with that. But here's where I start kind of like wondering kind of where this goes. Do you run your personal finances and your business differently? Like, for example, if we can agree like personal debt is bad, how risky should entrepreneurs and solopreneurs be when trying to build their business? You know what I'm saying? Let me rephrase that question. What needs to be in place with your business to start being more aggressive building your business, maybe in a more risky way than what you would do with your personal finances?
Okay, so that is a really interesting question, because the longer that I've been in the coaching space with business owners, the more I understand that people's philosophy and tolerance for risk is all over the board. So I kind of come at it with I'm not assuming that the way that I approach my situation is the same way that other people should, but I like to think about criteria, right? So thinking about, number one, what are the values that are guiding both my personal decisions and my business decisions, and revisiting those on a fairly regular basis to kind of keep yourself on track. But also really understanding the risk reward of what you're doing with your business. So, I mean, I would not say as a rule that consumer debt is bad. It is a personal choice. Everybody has a tolerance for what they're willing to deal with and kind of preferences around that. But certainly, having large monthly credit card payments or things like that hanging over your head can make a difference in terms of the decisions that you're going to make. So I know you and I have talked a little bit about Dave Ramsey and kind of those philosophies and things like that. And so personally, I prefer to not go into debt for personal reasons. But on the business side, I think people are probably more scared of debt on the business side than they should be. But the X factor there is, like I said, criteria and matching the purpose and the payback timeline with the type of debt. So if we're thinking about, an easy example that's on the personal side is a mortgage, right? So the typical length of a mortgage is 15, 20, or 30 years. And that all came about when that was the amount of time that you would plan to stay in a house, right? You buy that house and you're there for 30 years, so that makes sense. So if you think about the same type of time matching in your business, if it's okay, I am going to take out a business credit card that's got a 0% rate, for example, for a year, and I'm going to use that to fund the startup of my business. Then you want to go into that with a plan for what do I need to do revenue-wise and profit-wise to be able to pay this thing off in 1 year. Similar if you have a business where there are larger investments required, maybe you need to, have a physical space. And so you're going to get an SBA loan for to pay your rent and whatever as you get up and running. You want to think about okay, is the term of this loan and the term of my lease kind of similar? And do I have a plan for making the payments? That's the big thing, is do I have a plan for making the payments, or am I just winging it? If you're winging it, that's the easiest way to get into trouble.
Yeah, I mean, it makes sense that they're definitely correlated, tied to values, like you said, but also too, they play just a little bit different, because I think if I'm hearing you right, you would say, I'm not a huge fan of personal debt, but at the same time too, debt in business perhaps looks and feels a little bit different. Before I move on, am I hearing you right on that one? Okay. So riddle me this. I'm just throwing these hot potatoes in your lap here. Somebody who's playing perhaps too conservative. I think that we would both agree you got to play offense. You have to be playing. If you're in business and you're not playing offense, it's not going to show up. You will not make it. And I'm speaking from personal experience, who comes from a very Dave Ramsey conservative type of mentality. If you're in business, like you got to be playing smart, but you got to be playing offense. Talk to somebody who is maybe in business and it needs to increase. We need to increase our revenue, sales. We need to increase profitability for this thing to actually be an entity that does anything whatsoever. What's one thing that you could tell them to kind of get them going where they can start aggressively, air quotes, start building, but not be reckless?
Okay, so the first thing that comes to my mind there is thinking about your different options and expectations. So, if we're give me an example of something that like somebody in your audience would be thinking about for, should I spend on this to grow my business or not?
100%. So like people that are trying to build platforms, they're working a W-2, so they've got like a little side hustle, it's not really making any money, but they feel called to maybe invest in somebody to help them do content. Build a podcast, write a book. I wrote a book. I mean, I self-published a book. That wasn't a small check, right? And so they're not crazy out of bounds. We're not talking hundreds of thousands of dollars, but like $5,000 here, $1,000 here, something like that. What should they do with that?
Yes. So thinking about, number one, timelines again. So if you're thinking about, okay, I'm building a platform, I'm going to pay somebody to do my social media for me, right? So to create the content, to help me with a plan, to do the posting for me. And that's an investment that I think is worthwhile in my business. You got to be really intentional about the real timeline for something like that. So number one, I would say ask people who have done it. How long is it really going to take before I'm seeing a return on this? Because a lot of times, something that I see a lot is people are like, okay, I'm going all in on social media, and they don't have a realistic timeline of how long it's going to take. So then it's like, a couple months or whatever, and it's not taking off. And then they're like, oh, that didn't work. Okay, let me do something else. Now that didn't work. Now let me do something else. Now that didn't work. And so now you're like stacking up all these costs when in reality, it's going to take some time to just be doing organic social media to gain traction and monetize it, right? So talking to people who are a couple years, 5 years, 10 years ahead of you in your industry and getting a good understanding of, if I'm putting out this money, number one, what's a reasonable amount that I need to expect to put out there? And what's a reasonable amount of time that I need to commit to staying in that before I decide if I'm going to keep doing it or not. Because I don't know about you, but from my perspective, I've had those experiences where I'm like, I don't know how long I should be, trying this out before I'm like scrapping it and going on to the next thing. So having and then you have those days where you're just like, I'm just going to burn the whole thing down and become a librarian. So having those like guideposts of like, nope, we're doing it for 6 months. We're doing it for 6 months, and then we'll reassess.
I like that. You brought up 6 months just now. What is reasonable? Like I had Scott Clary on the podcast not long ago, and he really preached like you got to position yourself to really be in it for the long haul. Like we as entrepreneurs, like I want that big win. I'm going to invest in this agency to help me blow up my YouTube channel. And we can see ourselves with 1 million subscribers and all the things. And I think people underestimate how quickly it can take off, but they also underestimate just how much time, effort, and energy it does take to build it. As you look out ahead, obviously it depends on many factors. One probably being viability, how much cash do you have in the bank? Are you making any revenue? But like, what is a reasonable, if you're going to try something new, what's a reasonable timeline to give it? It's not 2 weeks. It's probably not even 3 months, but is it 6 months, a year? How do you coach people in that?
Yeah, I say if you are investing in something, 6 months for sure. If it's something as small as like a new habit, for me, it's 90 days because I know that I'm going to fall off the train here for a little while. I'm going to have to get back on. So for me, mentally, it's, small changes, 90 days before we're making a decision if it works or not. For bigger things, 6 months at least. But it also depends on, it depends on what you're out there trying to do and kind of the sales cycle. Like my business is very much a trust-based business and, people needing to feel comfortable having uncomfortable conversations with me. So that means that somebody is most of the time not going to find me today and call me next week and become a client, right? It's going to be much longer than that. I have people who have been like, I've been watching you for 2 years and I know that you're the right person to help me and I'm finally ready, right? So for me, I know that it's a long game no matter what I'm doing because I'm in that just high trust and kind of uncomfortable conversation space. So really depends on what, who your people are and how long it takes for them to make that buying decision.
I think that's good advice because the sales cycle for every business is different. And so you've got to give it time for people to get through that sales cycle. Otherwise, again, I think I've done this and I've even seen other business owners do this. They jump from one idea to the other and they never give it enough legs to really let it do anything. And then now you are really chucking money down the drain. And to the point at the top of our conversation, that hurts your profitability and your margins and doesn't create a sustainable business.
Right.
Let's start landing this plane. Like I want to ask you one more question, and you probably have already touched on it already. But if you could install one mental shift, like one mindset shift when it comes to financial literacy or how people are running their business. And again, we're generalizing because people are all over the map, right? Like what is one viable thing that you wish you could go and install into some of the listeners here that are either building businesses or have businesses?
Yes. Okay. So here's what it is. There is no such thing as a financial mistake if you correct it. So if you recognize that it was, okay, so for example, I do this in my business at the end of every year at a minimum. I look back at all my expenses and I say, okay, which of these things were essentially a sunk cost? Like I tried it, I thought it was going to be great, it didn't work. Okay, what's the dollar value of that? And I'm not going to do that again. So now what does that look like going forward? Am I going to put that money somewhere else? Have I just realized I was trying too many things? I don't need to replace that activity or anything like that. So going through the reflection process of what did I spend money on that didn't work, and then forgiving yourself for it. As long as you're not doing it again, as long as you are making better and better decisions as you go along, that's all you can do. So don't beat yourself up for the things that you've done that didn't work or the things that feel like mistakes, because it's in the past. Learn from it. What's the lesson? And move on and don't do it again.
Great advice. By the way, if you are considering going into business on the other end of this podcast, you will make mistakes. You will blow money.
So, okay, can I give you my completely off the cuff, just thing that rolls around in my head that's based on nothing except my own experience? Okay. So for all of the talk about bootstrapping your business, starting from zero, in 3 months I made $1 million kind of stories that you hear. In my experience with my clients, with myself, with just talking to people who are in the space, I would say if you want to build from the ground up a business where you don't start on day one with clients already lined up, expect to spend for sure 5 figures on mistakes. 10 grand on mistakes. 100%. Probably 2 years in a row. So maybe 20 grand. Because it just takes time and it takes experience to figure out what's going to work. Unless you are truly like starting out with, I have my whole book of business that I'm bringing with me from my W-2 job, essentially, or something like that. So
I think that's great advice, because I have 10 years ago, before I ever kind of went on this journey, if I lost, $500 on some stupid mistake, that'd keep me up. $1,000 mistake would make me up. Now I'm like, that only cost me $5,000 to learn that lesson. Oh shoot, I'd take that all day long. Because in business, $5,000 can come back to you like that. What I learned in that mistake can pay me back 10x tomorrow. So I think, again, there's a difference between being reckless but being very calculated, and then not being afraid. Just even recently online, I just said, what's the worst that can happen? It doesn't work. Yeah, but you learned a lot from it. So there has to be this level of I'll say aggression, but offense that needs to get played within reason. And to your point, if you are structuring your business correctly, it will all fall into place and you'll have something sustainable in the future. So I appreciate the conversation today. And I find it really fascinating. So thank you for your time today. I appreciate that very much. Where can people find more about you, the Value Gal, online?
Yeah, so probably the best place is LinkedIn. So Quinn Driscoll on LinkedIn, or my website, thevaluegal.com.
Love it. Well done. If this conversation sparked something in you, don't let it fade. Please rate, review, and subscribe on your favorite podcasting platform. Don't forget to connect with me online as well. Follow me at Jerrid Sebesta on Instagram, LinkedIn, and YouTube, or dive deeper at my website, jerridsebesta.com, where all my free trainings and resources are waiting for you. And remember, stop chasing the life you want and start becoming. This is the Breakthrough Effect. We'll see you next time.